Welcome to the Hamsi Analytics Daily Market Commentary. I'm Paulo Navarro. Today is Wednesday, August 15, 2012. For the market internals, the New York Stock Exchange Advanced Decline Differential closed at 716. Nasdaq Advanced Decline Differential closed at 911. There were 15 new 52-week highs for the S&P 500 and one new 52-week low for the S&P 500. Pretty positive action here on the market internal despite the low volume and the low volatility we had. For the volatility, there were 312,000 contracts traded on the VIX today, with 42 million in total premiums paid. For the dollar-weighted put-call ratio in August, we saw 1.97 with 16% of the total premiums paid. That is neutral to bullish reading here. On September, a 0.41 with 21% of the total premiums paid, a bearish reading. And October, we saw 0.09, which is a very bearish reading, with 42% of the total premiums paid. Okay, here we have the daily chart for SPX. We're gonna go through the charts pretty quickly since we're not doing anything on the market. Volume is pretty light, volatility is not here, and pretty much we have the same levels as yesterday. Here we have XPX daily chart, and we are still in the positive 2 sigma channel. We're still holding these levels, but again, we want to see either the break of the 1400 and maybe come and test this 0 sigma 1380, or go and test the high, go for 1425, which is our next target. As talked about yesterday, CI now red and flat here. This is somewhat concerning. Maybe we're starting to turn for a little pullback here in the market. For SPY, here we have SPY daily chart, pretty much the same, holding positive 2 sigma channel, and we're still CI is positive with somewhat good on the SPY chart. If we go to the 60-minute chart, this is the weekly pivot and resistance. Here we have support, pivot, and resistance, and again we're between the pivot and resistance number 1. You could see here this yellow line at 140.44, and support resistance number 1 at 141.33 right now. We want to break above it, go to 142. We talked about these levels yesterday. You could see the low volatility environment we are. Look at the little changes we're getting here on this 60-minute chart. Nothing's going on. Volatility is very tight so far, so we're here just watching for a breakout or breakdown from these levels that we have so far. Going to GLD. GLD has been getting some action, at least more than the market. Today we were up 0.3%, touching 0 sigma, closing at 0 sig. Important level, we talked about this yesterday. We wanted it to hold here in order to make a higher low. We're talking about making higher lows here on GLD, and you could see how clearly these higher lows we're making so far. We want these levels to hold and maybe come and break this 158, 159 level to come and test the 200-day moving average at 160.50. Important levels here on GLD, but pretty much we remain range bound for GLD until we get a breakout or breakdown. Not much going on here on GLD, much going up and down, and we're still on the range. You could see it here on a bigger frame, still here from this range. You could see the 158 being some resistance, and on the downside we're looking at the 50-day moving average at being support. Right now the 50-day moving average is at 155. Those are the levels to watch here, but again, low volatility environment in gold as well. Last chart we're gonna look at VIX. Everybody has attention on VIX because it's pretty low right now. Nothing going on here on VIX. Today we were down 1.5%. We closed at 1463. We remained on the -1, -2 sigma channel. That's the important thing to watch here. You could see here, since we entered this channel, we have not break the channel either to the upside or downside. We could remain on this downward channel for some time. We want the VIX to remain around the 15 level. That's a pretty low volatility environment, good for the market and good here on the VIX for the Sigma channels. If we look at the VIX on a longer term range, we're gonna look at the weekly chart. Pretty flat, low volatility VIX here, but you can see previously here in April 2011 how low the volatility for the VIX was. Nothing happening here and remained for a long time here on depressed levels for the VIX. This does not mean that we're gonna do the same, but just wanted to point it out because everybody's saying about buying for the upside because we're really tight. We could remain in these levels for a pretty long time until something happens either with Euro or with the US, maybe something going on in the world. But I just want to mention we could stay in a low volatility environment for months. So that's worth keeping in mind here. For the McClellan oscillator, you could see here we're at 11 at the midpoint. There's not oversold, not overbought, pretty tight. The market could go either down or up here. Better just wait for a breakout or breakdown instead of just trying to guess what the next move's gonna be. That's what we have here for the charts today. Pretty much the same as yesterday and the day before. Pretty low volatility environment again and no volume. We have a special offer by TradeStation. Get your HAMSI Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great day and I'll talk to you tomorrow.